Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Technology stocks fall, bonds fall, and oil surges as the war in Iran shows no signs of de-escalation. Investor concerns rise as the possibility of disruption to energy markets, supply chains, and a jump in inflation loom large. Karen.
Let's take a look at those markets, energy in particular. Ed, I mean, extraordinary moves that we're seeing in oil. Oil is currently having the biggest move since 2022. At one point since 2020, it's the highest since 2024. That has implications for the Nasdaq, down almost 2%, and the S&P 500 down almost 2%. Why? Because the Federal Reserve cannot cut into this inflationary environment is the way that the market is anticipating. Bitcoin is off by some 1.7%.
The Nasdaq 100 is off session lows, but that is what we're looking at, right? There is targeted drone and missile activity as a threat to energy infrastructure in the Middle East. New York crude, WTI, up 8%, $77 a barrel, but also Brent, the global benchmark, surging to $85, first time in a long time. US 10-year yield had been above 4.1% and on track for its biggest two-day advance since April of last year. We've come off that a little bit. We are very focused on what is happening in the Strait of Hormuz, right? There are boats that are stuck and cannot carry oil. As a result, the producers, like Iraq, have stopped producing. And by the way, America relies a lot on Iraqi oil in terms of the refiners. So we're going to look at that. There is specific tech action. So let's get to that action with Bloomberg Equities reporter Ryan Vlaselica. There's a lot to unpick here, right? At one point, the Nasdaq 100 was on track for its biggest drop since October, certainly since November, when we got that strong jobs print. There is inflation concern, but broadly, where is the risk-off sort of mentality and sentiment you're seeing? Ryan.
Good morning. Thanks for having me. So one thing I would just note is that all of this recent news, all this rise in political uncertainty comes at a time when investors were already showing signs of being cautious about tech. We have seen concerns about how much money is being spent on AI. We have seen concerns about AI-related disruption. So if you add a new wrinkle on top of that, I think you already had investors predisposed to sell and sell pretty broadly.
Ryan, more broadly, just dwell a little bit more on what's happening in terms of the software perspective and what's happening in certain names. MongoDB, and I hate to bring it back to what the market was treading water on or trying to digest before this geopolitical upheaval, but we have to go back to what's happened in terms of MongoDB's extraordinary sell-off, despite the numbers not being quite as ugly as many would have anticipated.
Right. So this occurs against the backdrop of people being very cautious that AI services are going to diminish the growth prospects for legacy software companies, offer some kind of replacement, diminish their pricing power, their margins. MongoDB's results kind of fit into that narrative where they weren't necessarily bad, but the upside was a little bit smaller than people had expected it or relative to past quarters. The outlook was not dramatically higher. All these sort of concerns just feed into this broader environment right now where people are very concerned about AI. When you have results like this, it just sort of add to the concern by not really diminishing them. Like I said, people were already predisposed to sell, and you're really seeing that in a stock like Mongo right now.
Right. Also, massive underperformance in chip stocks, which we're going to explain a little bit later on in the show. Bloomberg's Ryan Vlaselica, thank you very much. Let's talk a bit more broadly about what's happening in markets. Brian White is Piper Sandler, co-head of technology investment banking. We're going to have a different conversation probably to the one that we thought we might be having. Caroline made a really interesting observation at the desk this morning. You look at a name like Palantir, for example, still down significantly. There was a big run up yesterday. Cyber stocks under pressure. Those are areas that you might think in this scenario, this environmental war in Iran, might go to the upside. It's an area that you look at, software. Go from there, please.
Yeah, I mean, I think that it's still going to be the bright spot in this market. I think the challenge that we have right now is that this increasingly looks like a prolonged conflict, and so investors are selling off right now. They're panicking in regards to what continues to go on. This doesn't appear to be kind of the limited engagements that we've seen traditionally, and so thus, when you're looking, broadly and you step back, I still think if you want to be in cyber or you want to be in defense, those are going to be bright spots. But right now, everything's risk off.
Co-head of Tech IB at Piper Sandler, but I've read your CV. I hope you don't mind, and you know the apparatus of government well.
Yes.
How important is that kicks in a market environment like this? You understand the understandable, what a policymaker may or not do in a war environment.
I think it's helpful because you can put things in context. I mean, fundamentally, what we look to do is advise clients on how to navigate this turmoil, and having the experience to see how government thinks through these issues, particularly during conflict like this, is critical, because we're not just dealing with the AI disruption, we're dealing with geopolitical disruption, and clients are wondering, how do I raise capital in this environment? Should I think about M&A on the buy side or the sell side?
Right.
This is where people are going to be thinking about, what moves should I make to take advantage of the uncertainty in this environment? Because as we know, people that are able to do smart moves right now often are the long-term winners, because they don't sit back, risk off. And that experience is helpful when I'm advising clients.
How much is that experience applicable to the current administration, though?
Well, I think it's traditionally the levers of government remain pretty stable. There is obviously some political influence that goes on over the years, but one thing that we should all take great regard in is just the experience of the military that is there, the decision apparatus, and what has been in place to make these informed decisions. I think as we're increasingly seeing, this is going to be a prolonged conflict.
Right.
It is going to require a lot of deft policy making, particularly as we engage with the Middle East that is in a bit of turmoil. I don't think when we woke up on Saturday morning, people nearly suspected how wide this would appear to be. And so people are going to be looking for some off-ramps soon, and the market impact of that is unknown. And that is what people are reacting to right now.
So without wanting to be just knee-jerk and thinking through if this could be a longer-term conflict, if there's inflationary pressure there, what does it mean in terms of the influence that AI has been having on the market thus far? Do you just stay in the winners that have been working and, yes, maybe over-allocate a little bit more even to defense tech?
I think defense will be a bright spot. And then even before Iran, defense looked like an area where there was going to be tremendous innovation. I mean, what we're continuing to see is that people are looking for new technology, new approaches. We have a increased geopolitical conflict in this world. So being in defense is a good place to be. And that was pre-Iran. And as it relates to AI, I think there will remain some bright spots, particularly in infrastructure, particularly in cyber. Right. Those are going to be good places to be. And over time, I think people will gain more confidence as we see earnings come out. I mean, don't forget, we still got a couple more weeks of earnings to go this week. We're going to have news out of a couple of the technology conferences, and hopefully that will start to calm this market down a little bit more, and people will realize that this is a bit of a sell-off that is not, applicable to all.
Just really quick, and trying to keep this on the news, DHS is warning, right, which seems inevitable, about the threat to citizens in this country in response. Cyber. Just give me more on cyber and why it's not getting more traction in this environment.
Yeah, I would say two things. First and foremost, we've always known that Iran, via its proxies like Hezbollah, may have the capacity to do something in the American homeland. So I think that's partially what we're hearing from the administration. I think more saliently, though, is that people need to invest in cyber right now. The attack surface for both the private sector as well as the public sector could not be any higher in terms of their threat environment. So everybody should be paying more attention to what they need to do, because the Iranian cyber capability is quite strong.
Ryan White, Piper Sandler, great to have you here on Bloomberg Tech. I want to get to what happened in Korea overnight. Shares of Samsung and SK Hynix both falling by around 15%. There was a holiday in the Korean markets on Monday. So this was the first session since the war in Iran and the events of the weekend. But remember that the Kospi, the main index in Korea, has been a massive outperformer year to date, led by Samsung and SK Hynix. It's just a market reaction, a sentiment reaction, particularly with the energy infrastructure concern in those two names. But it was a big move, and maybe that's carried to chip names in the US in this session.
Certainly extraordinary sell-off over there. Meanwhile, coming up, well, we look at some extraordinary moves from Sam Altman, calling OpenAI's Pentagon deal rollout sloppy. That's next. This is Bloomberg Tech.
OpenAI is facing backlash over its new Pentagon deal, and CEO Sam Altman is admitting the rollout was mishandled. In a post, Altman said the company shouldn't have rushed the announcement, saying it looked, quote, opportunistic and sloppy. Here with the latest is Bloomberg's AI reporter Rachel Metz. It's one where you probably need to explain to us what the deal is and how it came about, but a very public statement by OpenAI's CEO about how it was done.
Yeah, I mean, this was all part of this really rushed situation that happened over several days. We had Anthropic squaring off against the Pentagon saying we're not going to be using Anthropic's AI models anymore, and making some even further declarations than that about how companies perhaps could even use Anthropic's models if they work with the government. And then OpenAI very quickly swooped in and said, we have a deal with the government. So I think that caught a lot of people maybe not so much off guard, but it certainly left a lot of people upset, including some people at OpenAI who were posting about it publicly on social media.
A lot of people were painting the streets outside OpenAI and, well, fears and concerns, Rachel. This has prompted a backlash that is actually impacting downloads of ChatGPT and certainly has been pushing those to be getting into Anthropic's offering Claude instead. It would feel like the numbers stack out in that way, Rachel. But talk us through ultimately what has been changed in terms of their agreement with the Pentagon, if anything.
I mean, it sounds like OpenAI has basically done a little bit more back and forth with the Pentagon to make sure that the red lines that OpenAI says are in place regarding their software not being used for surveillance will be kept in place.
Rachel, sorry, do we have any understanding of like how big a piece of OpenAI's business this is? Like, is this something like severely critical to them, or is it still the case that, you know, ChatGPT subscribers and enterprise is really what they're most concerned about?
I mean, at this point, I don't think that this is like an overarching piece of their business. I think it is a smaller piece. But as we've seen with the disagreement between Anthropic and the Pentagon, just having this kind of connection can really telegraph a lot about your business, and it could lead to other things, other ripple effects, and other kinds of business either happening or not happening now or in the future.
Rachel Metz, thank you so much. An ongoing narrative that involves geopolitics at the same time as generative AI. Let's take a look at those tech markets in the eye of a geopolitical storm that is Middle Eastern conflict. We're currently seeing 1.7% lower on the Nasdaq 100. We had fallen more than 2%. Yeah. In fact, only 13 names are on the green on the Nasdaq 100 as we speak. New York crude is where the action lies. We're up more than 8%, Ed. We're seeing this inflationary tension mean that people think the Federal Reserve cannot cut into the situation. Right. Therefore, that has a long-term impact on the value of stocks right now. We're
way off session lows, but at one point we're on track for the biggest drop on the Nasdaq 100 since October, when the president was really escalating the tariff tension with China. That's how markets are weighing in here. We're also tracking shares of Nvidia. One of the top stories on the Bloomberg terminal and on .com, down 1.6%. The US is weighing new limits on Nvidia's AI chip sales to China, including a potential cap of 75,000 of its H200 accelerators to any one single Chinese company. That's according to sources. Bloomberg's Ian King is here to explain it. When that regulatory filing hit at earnings, they were pretty clear that they have no idea whether China would even let the chips in. But what we're reporting is on the US side, putting a cap on the export, the cap level and the strategy behind it. What do we know?
Yeah, I mean, the understanding had been that the US side was more amenable to this happening.
Right.
And that China was kind of the roadblock. But now what we're reporting is that there are more restrictions, more kind of fine print details being piled upon it. And that obviously makes the situation more difficult and the likelihood of major shipments and major business less likely. And that's why, in many ways, Nvidia and Jensen didn't include any China business in their forward-looking guidance. So do we just take it from here that China doesn't want even H200s, and where we are in terms of a potentially crafted Blackwell offering? Yeah, I mean, the way that NVIDIA's leadership have phrased it is like, look, you'll know the Chinese have given us permission when you see the Chinese companies make orders. We haven't seen them make the big orders yet, so obviously that doesn't look positive. It doesn't look hopeful for the way things are progressing.
Go back to the basics of what Caroline just said. The forecast for sales is $78 billion, plus or minus 2% in the quarter. Does not include any China. But when you did your earnings piece the next day, a lot of the analysts were like, well, China is then therefore potential upside in the event they are allowed to do it. Jensen's modelling for that or not?
It doesn't appear to be. I mean, they're being prudent right now. I mean, the potential upside came from the detail that we got during earnings, which is, hey, we got a few licenses. Right. So Wall Street was like, oh, great, crack of light. Here we go. And then now we get this, and obviously we still haven't seen any movement from the China side either. Now, China used to be a significant area of revenue. What was it? Almost at 20% at one point for NVIDIA numbers, or thereabouts.
Where's the Middle East at? Can I just ask something to throw a curveball into the mix in the current geopolitical situation?
No, that's a very good question. Obviously, Nvidia cares very much about what's called sovereign AI, which is, countries' attempts to try and build their own infrastructure. We've seen that in Saudi Arabia. We've seen that in the UAE. And these are areas where there's a lot of cash and there's a lot of investment in this future economy being made. So any threat to that would obviously be a threat to this whole system.
Well, certainly Nvidia is one of the key legs to the downside in a points perspective today. Ian King, we're always so thrilled to have his expertise, and it's nice to be sat next to him as well. Meanwhile, let's take a quick look on what's happening with Apple, because if you didn't realise, amid the torrent of news that you're trying to digest today, the company is actually introducing refreshed MacBook Pros and Airs with an M5 chip. The company also raising the prices of those products amid an industry-wide memory crunch. Other products announced include 2 new external monitors. As you see, shares down 0.9%, so actually better performing than the rest of the market, Ed.
OK, we're going to get back to our top story in the show, and that is the conflict in the Middle East. It's poised to increase demand for missile defense and strike capabilities at the same time as supply chains for defense tech are hampered, and we're seeing that play out a little bit in some of the names that are on the move this morning. This is what markets look like broadly. It's basically simple. Stocks down, bonds down, oil surging. A really close look, Caroline, at the Strait of Hormuz, which is a main shipping channel. About a fifth of the world's oil passes through the strait, and through different channels, Iran has said that it is certainly going to be targeting that. We've also seen other energy infrastructure targeted. But that's the picture right now. We're off session lows, but down significantly on the index level, and Bitcoin around $69,000 per token. It's halftime, and we'll be right back. This is Bloomberg Tech.
Welcome back to Bloomberg Tech. War in the Middle East. We take a look at what's happening in the markets amid a US-Israeli focus on Iran. We've got the Nasdaq 100 off by 1.6%. Micron leading you on the points perspective to the downside. So too is Nvidia. We're seeing the S&P 500 off by 1.5%. Bitcoin is acting like a risk asset today. We're back lower, but it's still elevated versus where it was on the weekend. 68,800 is where we trade. Move on to individual names, because it is important to see where the impact of tension and ongoing war in the Middle East, where it has and what it does to assets owned by Amazon, for example. AWS warning of prolonged disruptions to its services after drone strikes damaged 3 of its data centers in the Middle East. They say the company said drones had directly struck 2 facilities in the UAE and damaged infrastructure near other facilities in Bahrain. Palantir. The sentiment shift today is so negative that even companies that are meant to benefit from the focus on defense and defense tech are on the lower side. We're off by 1.4% after a rally yesterday. More analysts are going positive on Palantir, of course, software that's used by the government very much into defense perspective. And we're seeing 20 out of 31 analysts now saying buy the stock, Ed.
OK, shares of defense firms have joined the market sell-off, even as the conflict in Iran reinforces their critical role, the critical role of the US primes. Let's bring in Bloomberg Intelligence senior analyst Wayne Sanders for more. Wayne, you've been keeping the React and the research up to date over the last 2 or 3 days. You have this scenario where if this conflict lasts weeks or more, you look at the airstrike capabilities the United States has and who might benefit. We showed some of those names on the screen just there, but give us your latest research, please.
Yeah, absolutely. Thank you so much for having me on. When you think about this conflict so far, a lot of the munitions experts, right, you're looking at RTX, you're looking at Lockheed and Northrop, are really the ones that are set really to benefit off of part of this, because they're going to have to replenish what they've got. The problem is that as we continue to expend a lot of the munitions right now, especially if you're looking at your AIM-9Xs and your AMRAAMs, which are your aircraft missile shots, as well as your Tomahawks that are coming from your naval vessels, which comes from RTX. These are the ones right now that are going to be critical also in further contingencies that we would look down the road, 2027 and beyond. So we want to make sure that there's a balance between both, that we are using them effectively now and having the ability to replenish them in the future.
When we turn to you, because not only are we lucky enough to have you as a senior defense research analyst here with us at Bloomberg Intelligence, but your past experience with the Office of the Undersecretary of Defense up until 2024, the fact that you were so ingrained with the Department of the Army as well. Therefore, are we well placed when you're looking out to 2027 and the likes? And in the here and now, are we using the right strategic assets?
Yeah, no, great question. And so the bottom line I try to tell a lot of people is the U.S. military does a very good job of making sure that they have contingency plans in place. They war game these all the time to say, okay, these types of conflict scenarios that we would be looking at would require this amount of munitions. It would require these amount of aircraft. It would require these amount of targets that we would want to be able to hit. When you put all those into place, I guarantee you that there is not a way where the President of the United States got a briefing from the Pentagon that says, hey, we're going to run out of missiles in a specific period of time if we were to go into Iran. So they have those contingencies in place. They know what they're doing from that. Given the fact that we have air superiority as well, means that we have plenty of resupply capability in the area as well.
So when I want to talk about what's happening on the ground, our colleagues at Bloomberg News and at Bloomberg Economics have basically done the missile math. For the United States, this has been focused on the Patriot missile system, right? $4 million missiles, whereas Iran has deployed lower-cost $20,000 drones. There is evidence that the U.S. is also looking at drone strategy. What are you seeing in the data that's being published?
Yeah, we're doing a lot right now. The U.S. is doing a lot, especially on counter-drone technology as part of the Pentagon's Replicator 2.0 initiative. There are a lot of companies out there right now, BAE working on APKWS as well. That's been something that's been used in Ukraine as well from a counter-drone capability. And then you're also, you start looking at things like directed energy, high-powered microwaves, and high-energy lasers. Those are further out, right? They are not right now at the point of full-rate production and scalability. But it starts to ask the question, like you guys are talking about, is you have to be able to look at the magazine depth, how much it costs for us to be able to shoot those things down, and they've got to be alternate technologies that are out there that can help us be able to do that a lot cheaper. You look at it on munitions side of the house, we reverse engineered, the United States reverse engineered a Shahed drone specifically to create the Lucas drone. So from a strike perspective, you're now looking at, instead of a $1.5 million Tomahawk missile, you could actually use a $35,000 unmanned one-way attack drone, which this is the first operational employment that has been out there is during this time in Iran.
Wayne Sanders, a Bloomberg intelligence analyst, as well as retired colonel. We so appreciate your time today. Look, demand for defense tech may be set to rise, but the spike in oil, the gas prices, the closure of key shipping routes, well, they're raising concerns about how those products reach markets. Tara Murphy-Doherty is here with us, CEO of Gavini. Look, it's a software provider for defense tech supply chains. You have the inside track on resilience right now. You sit there in Washington, Tara, and I asked, you put out a note really thinking about an availability crisis that we currently have. Spell out that reality that we have in acquisition right now.
The reality is that I think you can see from the weekend the demand for American military power is continuing to increase. And so much of the conversation, including what we just heard from Wayne's great summary, is focused on production of new systems. That's incredibly important. But when you also look at what the United States is bringing to bear in the Middle East right now, F-15s, F-22s, some of these systems are sustainment challenges as well.
Right.
And so there's a production need in the United States. There's also an availability of parts and legacy systems that is equally important.
We're not in any sort of real immediate crisis, though, when it comes to this Iranian focus and battle that currently rages.
We're not. I would say that the United States today is capable, including not just from a military capability perspective, but a capacity perspective of executing any military operation that it deems appropriate. We are not in immediate danger of running out of stockpiles of munitions. We are, when you look at longer-term trends, in a situation where if we are firing 1 year's worth of missile production in a 1 week time, then things start to really become questionable in terms of overall sustainability.
Tara, one of the most read stories on the Bloomberg is about Russia seeing the war in Iran as putting pressure on its own air defense systems in the context of Ukraine. Very interesting. Earlier in programming, we spoke to SF CFO about how Ukraine fits into the Iran dynamic. Just listen to this.
Some of the experience from Ukraine is developed quite quickly into the use. Some of this will take time, and the experience is still coming. So I'm expecting now the focus in AI, as particularly, is so massive, as well as all the other technologies like, for example, 3D printing of the missile, etc., what we can use within the US and European startups.
Exactly the same topics you've been discussing, right? The lessons that should have been learned from Ukraine in predictive preparedness versus, like in the US military apparatus at least, this cultural just-in-time system, essentially. How do you see that learning from Ukraine and what we're seeing in Iran?
I think you put it perfectly, Ed. I don't think the learning has been absorbed enough. And we know that AI, the era is upon us. And what we need to do as a U.S. military, as a U.S. national security apparatus, is better harness it for U.S. national security aims and overall American interests. Your point about being able to look ahead here is such a good example of where AI can be powerful. You know, we were just talking about the impact of this war with Iran, or this military crisis with Iran and on the primes. And yet one great example of how Gavini uses AI in this context is to demonstrate that when you look past the primes, the sub-tier suppliers of critical parts for those munitions are shared. And so you end up with these bottlenecks and choke points in the supply chains for military systems that used to be completely invisible to decision makers. That's not true today with what you can do with AI and data. And so the next step is we understand those dynamics. What are we doing about it from a pre-positioning and stockpile management perspective?
Tara Murphy-Doherty, CEO of Gavini, thank you very much. So coming up in the program, Coherent CEO Jim Anderson joins us to talk about his company's new strategic partnership with Nvidia. That includes a $2 billion investment. That's next. This is Bloomberg Tech. Nvidia has agreed to invest $4 billion in the photonics firms Coherent and Momentum. The two equally sized bets by the AI leader should ensure demand for advanced optical components used in data centers. Let's discuss with Coherent CEO Jim Anderson. I think a reasonable place to start is to understand the role that a laser has in the server design and in the data center more broadly, how servers talk to one another, because the market reaction is quite clear to how investors feel about this, but where does the technology fit in?
Yeah, that's a good question. First of all, thank you for having me on. I appreciate it. Yeah, the way you can think about it is a laser is really ultimately it's photonics, and it's really about light, and it's about using light to transmit data in the data center. And there's a good portion of the data center already today where all of the communication of the data is happening with light. And the reason that light gets used rather than, for instance, an electrical signal is light is the absolute fastest, most power efficient way to transmit data. And so good portion of the data center already runs 100% on photonics optical connections. But as we move forward, building new data centers, as we see a massive ramp in the amount of data flowing through these data centers, more and more of the data center connections will be based on light, on optical photonics.
So in this arrangement, you'll take the funds for R&D purposes, but inside of it, there is a purchase opportunity for Nvidia. Nvidia's done a lot on silicon photonics. They've told me about it for quite a while now. What's new in it for them? What is it that they're able to now do that they couldn't do themselves?
Well, they're relying on us to bring the photonics expertise, right? So Nvidia for us has been a long-term partner, actually over 20 years as a customer and a partner through their Mellanox acquisition. So we've had a long history with Nvidia, and really what we're doing is working together to use photonics to advance the architecture of data centers, to find new innovation within data centers. And the key thing that photonics or optics brings is incredibly power efficient data transmission, because again, there's no more
as opposed to transferring via electrons.
Exactly. So as you increase the data rates, as you increase the amount of data that's being transmitted, you have to, if you're using electrical today, eventually you'll hit a physics limit and you'll be kind of forced to switch to optical. And so we'll see more and more of the connections within the data center move to optical. And that's really where we come in. We're a global expert in photonics and optical communication.
The market is forward-looking. they understood the copper to optical vibe for a few months, if not years, and your shares have shown that. Yeah. But what's interesting is Lumentum CEO was speaking at an event yesterday, Michael, and he was talking about even with scaling of their supply, they're still way behind. They're falling further behind where demand is. Is that something similar for you as well?
Well, demand, there's no doubt, demand is incredibly strong, and that is both in the near term and in the long term. I mean, the forecasts that we're seeing from our customers, not just Nvidia, but large hyperscalers, cloud service providers, are just exceptionally strong. And so what we are doing about that is we are rapidly expanding our capacity. I mean, we are building capacity as fast as we can.
What does that look like?
Yeah,
what sort of supply chain do you
I was going to say, just as one example, Ed, you asked about the lasers. Let's take the lasers.
Right. We all want to talk about lasers.
So if you look at the lasers, we're doubling our capacity this year, right? So we're coming out with twice as much indium phosphide. That's the key material underneath the lasers, but twice as much indium phosphide production. So we are ramping our capacity as fast as possible. Right. But back to, as we see more and more of the data center convert from electrical to optical, you've got kind of two big secular growth trends underneath us. And number one, the data center growth, but number two, this conversion of electrical to optical. And so that just generates an incredible amount of demand. So we're trying to stay ahead of that. We're ramping capacity. This Nvidia partnership is part of that. That investment that they made into Coherent will help us ramp capacity faster and make sure that we've got the right capacity.
Ramp capacity where, right? We had the co-founders Mesh on the show recently, SpaceX alum who did lasers at SpaceX. Yeah. And they came to market with a very simple argument. Output of these systems at scale is done in China. There isn't a facility in the United States. There isn't the capacity here. Is that part of your game plan, or you dispute that?
Absolutely. Lasers, some of the key technology that we're developing and ramping is here in the U.S., right? So we have a long history of U.S. manufacturing. We were founded as a U.S. manufacturing company. We've got over 20 manufacturing sites across 13 different states. But one of the key technologies that we're ramping on behalf of Nvidia and other customers is that laser technology. Right. That's happening in Sherman, Texas, right? And that's a great facility. We've supported customers out of that facility for years, but that's where we're going to be, part of where we're going to be doubling capacity.
What do you need from a raw material perspective? What is it that makes U.S. manufacturing ever more capable? I'm sure you're discussing this with the government all the time.
Yeah. So one of the key inputs is it's the indium phosphide substrates themselves, and so we have a very diversified supply chain. We've, just like Nvidia is securing capacity rights to our capacity, we're doing the same thing with our suppliers. So we're making sure that we've got all the key input capacity or input supply secured. But look, we believe that these key optical technologies like lasers, we absolutely want to see that manufactured in the U.S. Now, we have other sites as well. We're a global company, and so we are ramping at multiple sites, but that's one of our key facilities is Sherman, Texas.
Jim, it's great having you on what is a rather busy week. Jim Anderson, Coherent CEO. Always love talking lasers. But we've got to head over to Bloomberg Invest now, where Bloomberg's Mike McKee is sitting down with Neil Kashkari, not talking lasers, talking federal policy, the president of the Minneapolis Fed Reserve.
We focus on core. Our target is headline inflation, but we focus on core because core is a better indicator of where headline is going. But even when you strip out food and energy, though they do eventually affect core, because just as you said, energy goes into producing core goods and services as well. So I think that process takes a while. For me, though, the bigger issue is just if headline inflation is going to be elevated for an extended period of time, coming off of 5 years of elevated inflation, boy, that's a scenario that we need to pay a close attention to, and we have to pay attention to what happens to long-run inflation expectations as well. And so there's a lot to pay attention to right now. Coming into this moment, I was feeling pretty good. Inflation is still too high, but I feel like it's been slowly heading in the right direction. The labor market is pretty good, a little bit getting softer, but generally speaking, we're around the bands of our dual mandate. And so I felt like policy was in a pretty good place, and we have the luxury of just letting it gradually glide back to neutral. Now we need to see with this new shock, potentially new shock hitting the global economy, how long is the effect and how big is the effect?
Well, as Rosanna Dana used to say, it's always something. And years ago, before we started the war, we were worried about tariffs. Remember tariffs. The consensus of the Open Market Committee seems to be, in listening to people speaking, that we're kind of in peak tariffs now. And you've basically said the same thing. Inflation should begin to come down in the second half of the year. But since the Supreme Court ruling, has that changed in your view in terms of we're not going to know what tariffs are for a while now, and we're not going to know when they're going to put them on or how they're going to affect the economy, so you can't really have confidence that inflation's going to come down?
Well, I think there's no question that the Supreme Court ruling... And now
President Trump and German Chancellor Friedrich Merz are now starting a bilateral meeting in Washington, D.C. Let's listen in.
Thank you very much. Thank you. Thank you, Mr. President, for having me here in this Oval Office for the third time now. Yeah. Really happy to have the opportunity to speak with you in these challenging times. We are on the same page in terms of getting this terrible regime in Tehran away, and we will talk about the day after, what will happen then if they are out. We have to talk about our trade agreement, which I would like to be in place as soon as possible. And we have to talk about Ukraine. There are too many bad guys in this world, actually, and this is an issue we have to talk about because we all want to see this war coming to an end as soon as possible. But Ukraine has to preserve its territory and their security interests, and, well, we will talk about that.
Right. We will.
Looking forward to that.
Well, thank you for being here.
Thank you.
That's some
for
interesting.
your hospitality. Thank you for letting me spending the night in your guest house.
That's
it's
right.
A very, very
good,
comfortable place.
You liked it, right?
Absolutely. Yeah, great place.
And
a famous place.
That's good. Very famous.
So many former presidents.
That's right. Yeah. Very famous place. Any questions?
Mr. President, did Israel force your hand to launch these strikes against Iran? Did Netanyahu pull the United States into this war?
No, I might have forced their hand. You see, we were having negotiations with these lunatics, and it was my opinion that they were going to attack first. They were going to attack. If we didn't do it, they were going to attack first. I felt strongly about that. And we have great negotiators, great people, people that do this very successfully and have done it all their lives very successful. And based on the way the negotiation was going, I think they were going to attack first. And I didn't want that to happen. So if anything, I might have forced Israel's hand. But Israel was ready and we were ready, and we've had a very, very powerful impact because virtually everything they have has been knocked out now.